had opened investigations in 40 companies more than a decade ago. That concluded in the year 2016, and in 2016 these 40 companies were under investigation by DRI on artificially inflating the value of coal imports into India. These coal imports obviously are critical because they power up all the thermal plants in the country, and the power generation, the electricity that consumers like you and I pay for, happens on account of the electricity produced using these thermal powers and the coal. So coal, by virtue, is a protected industry, so to speak, in India, and within this industry the pricing is done at a level that the market prices are fair for everyone. And the pricing model that coal follows as an industry in India is called the cost plus pricing. Now let's just look at what the Financial Times report this time around is. Not very different from what we have seen in the past, coming from Adani the Hindenburg saga, Hindenburg research suggesting at that time that shareholder price manipulation has happened in Adani stocks. OCCRP then coming in and sort of, reaffirming that Hindenburg report with a few more names, a few more sort of investigative pieces added, and now we have this Financial Times investigation. Let's run through what
it's like
the FT report really states.
All three of them are adding up. I mean, you look at the Financial Times report, it has added up from what Hindenburg suggested, what OCCRP unearthed,
so
and now
what it seems to me is that every report is building on the previous report.
Right.
What we saw in Adani Hindenburg report was that there has been this con created by Gautam Adani, and in this con, two issues: number one, short selling, profiting on account of short selling, and number two, the minimum shareholding of 25% in a publicly listed company violated. Now what we saw in the OCCRP report, which is a George Soros funding research investigative journalist organization, what that suggested was that there are offshore entities and money has possibly been siphoned off to these offshore entities, and certain names were taken. Now what the Financial Times report has done is built on that, taken into account the DRI investigation, the Directorate of Revenue Intelligence investigation, which concluded in 2016, which had named 40 companies, taken up Adani and Adani group of companies there, and tried and draw linkages between what value coal was imported at, what value coal was exported at, what value did we import it here in India and sold it eventually to power producers,
and the price differential,
and the price difference, and perhaps potential of money laundering because of that price difference.
Okay.
Let's take it point by point. So Financial Times is reporting, again disclaimer here that this is not our report, this is not our research, this is what Financial Times reported yesterday on 12th of October, that Adani Group has used offshore entities in Dubai, Singapore and Taiwan. It suggests that $5 billion worth of coal has been imported at double the market price. I think let's simplify it. What does this mean? This is not an example quoted in the Financial Times report. This is something we've made just to simplify and make our audience understand what the implication really is. So for example, from Indonesia, coal is exported at 100 rupees. Right, pure example, 100 rupees is the invoice value at the export hub, which is Indonesia, from where coal has been shipped. Now this shipment, when it comes to India, the invoice value at India's Mundra port, which is in Gujarat, controlled by Adani Group, the import value of presumably the same shipment of coal is, let's say, double, 200 rupees. Now because of the cost plus markup pricing strategy for coal, you have, and coal is usually the profit margins are single digit. So I've taken just a simple 2.5%, a lower end of single digit pricing. On that account, 205 rupees is what Adani Group sells this shipment of coal to power producers. Now let's move on and see what this really means. So this means that the coal was purchased at 100 rupees. Adani Group has paid Indonesia from the 205 rupees that it got. 100 rupees has gone to Indonesia. What about the 5 rupees is the profit at 2.5%? That profit has been reported. Now, what is the balance 100 rupees doing? That balance 100 rupees, apparently, as per the Financial Times report, is siphoned off to Dubai, Singapore and Taiwan. Now, let's look at the map of the world and see what this means. Now, the report conducted by the investigation by Financial Times says that 30 such shipments have been, data of 30 shipments between Indonesia and India between 2019 and 2021. Those reports and those invoices, those data points have been aggregated, and the conclusion being drawn, or the sort of idea being drawn from that, is that the same amount of shipment from Indonesia comes all the way to Mundra port in India, but money is routed through Dubai, through Taiwan and through Singapore, which means there are entities operating, shell companies or faceless entities operating in these three countries, which are actually invoicing India for India's coal imports, whereas the data corroborates, as per Financial Times, that this shipment has actually come from Indonesia. Now, who are the people who have been named within these countries? Let's look at that. There are two people who were named by the OCCRP report also. There was Chang Chung Ling and there was Nasir Ali Shaban Ali. Now, further on to that, the Financial Times report says these names were in fact there even in the Adani Hindenburg report. Their companies got disclosed in the OCCRP report. Now, what Financial Times has been able to really arrive at is that 31 million tons at a 20% premium were imported from Chang Chung Ling, who's based in Taiwan. Now, in Taiwan, this man lives in a residential complex. It is not an office address, and it seems to be a single person entity. Cut to Dubai. In Dubai, a company called Taurus, which is headed by a Muhammad Ali Shaban Ali. Financial Times has not been able to establish connection between Nasir Ali Shaban Ali, who OCCRP had named, who seems to be a close associate of Gautam Adani's elder brother Vinod Adani, and Muhammad Ali Shaban Ali. But Muhammad Ali Shaban Ali owns a company called Taurus, which owned 13.5% of Adani's free float. And this gentleman and this company is based out of Dubai. But again, it's a small operation, does not seem like a glamorous building as per the Financial Times report, where an operation of this scale should legally, logically be concluded. And then there's a third company called Pan Asia, Singapore. We don't have the name apparently of the person who heads it, but 1.1 million tons of coal has been imported at 30% premium from Singapore's Pan Asia. Now, let's move on and understand how the DRI investigation is really shaping out. So, DRI, which had started its investigation about a decade ago, reported 40 companies who artificially inflated the value of coal in 2016. And it also stated that supplier invoices were routed through third-party middlemen. Now, these third-party middlemen and this activity reeked of the typical case of money laundering. And after investigations concluded, after there was no ruling in favor of DRI, DRI had appealed to the Supreme Court of India. But this year, 2023, DRI withdrew its appeal petition from Supreme Court, concluding pretty much that there was possibly no headway. Now, let's understand in all of this, to be fair, what has the Adani Group mentioned? Specifically on the DRI investigation, Adani Group says that the issue of overvaluation of coal was conclusively settled by Supreme Court because DRI withdrew its application from Supreme Court. Let's see what Adani Group said on the Hindenburg research, which appeared in Jan this year. It said it is not only an unwarranted attack on a specific company, but it is a calculated attack on India. And latest, before the Financial Times report came out 2 days ago, Adani Group preemptively also gave out a statement on the Financial Times report, which was yet to be published 2 days ago. And let's look at what Adani Group said specifically on the Financial Times report. And it specifically, can we have that graphic please? It specifically said that this report is old and is a baseless allegation. And it also said that this is clever recycling, selective misrepresentation of publicly available data and information. So this is where we are right now. Can't state conclusively if there is something new, something fresh in the new Financial Times report, or is this a selective attack on India? I think in this line, it's also important, Shweta, before we move on to our guest, to understand and maybe, draw a hypothesis that could this really be an agenda that Financial Times is pursuing? And if you look at the report and if you look at, some of the remarks mentioned in the report, there is a clear-cut suggestion that Financial Times itself is saying that there could be a case where better quality coal was indeed imported from these three entities
hence the premium
logically,
paid.
and hence the premium paid, right? So I think there are, and the fact that a single Adani group of companies out of those 40 that DRI had originally started its investigation on have not been investigated into by Financial Times, not yet at least, and it seems to be a building up on Hindenburg Research, OCCRP, and then the FT report, which is trying to corroborate that and single out that Adani Group and Gautam Adani specifically are the only people under investigation. It has selectively left out the rest of the 40 companies that were mentioned in the DRI report.
Right.
And this DRI report, of course, has been withdrawn from the Supreme Court's appeal petition, and hence, is there really an investigation, even though the timeline is 2019 to 2021, but
further
until
to the
2016, further to
DRI
DRI investigation, but till 2016, it seems to be a build-up on the DRI investigation, which has summarily been withdrawn from Supreme Court.
All right, let's quickly get in our guest to perhaps explain to us what's happening here. Sriram Subramaniam, founder and MD of InGovern Research, joining us on the show. Sriram, thank you for taking time out. I think the first question on every person's mind after having gone through all these details that have emerged in the last 24 hours is, are these fresh allegations? If yes, any merit to these allegations?
Yes, these are to some extent fresh allegations because the Hindenburg report was on the minimum public shareholding, the OCCRP was on the foreign investors, in that sense, the unknown one Taiwanese gentleman and one somebody in Dubai. And this is about overvalue invoicing. So to that extent, it is fresh. But the fact is that these allegations come sort of at the moment of the Supreme Court hearing. Today is the Supreme Court hearing, by the way, and hopefully some conclusion will happen out there. When the investigating agencies like SEBI and Supreme Court are investigating, obviously to that extent, I would think that the timing of the allegations itself is a slightly suspect thing. And secondly, obviously, as your other guest pointed out, these are anyway old facts to that extent of being from 2016 and publicly available and investigated by DRI.
Mr. Subramaniam, if the DRI, Directorate of Revenue Intelligence, had started an investigation, had looked at data of 40 companies till the year 2016 and was unable to conclude any real, merit in its argument that there was coal inflation, artificial inflation, artificial invoicing, and has withdrawn its application, its appeal application from Supreme Court this year, then is it right to conclude that actually there is nothing in it, there is absolutely no smoke and no fire, and hence it could be malicious on part of Financial Times to further start an investigation which, which may not hold any water?
It looks like it. See, at the end of the day, coal is also a slightly, I would think, a competitive market. It's not that Adani is the only importer, right? So to that extent, pricing, there would be other importers of coal in the marketplace, and there would be other suppliers also, not just Indonesia. So the power producers who had the leeway to buy coal from any other sources also. So to that extent, probably this is malicious.
Okay, but would it then be fair to say that these matters were settled in the court when DRI actually withdrew its application? One of the reasons for withdrawal of application was it was unable to prove its jurisdiction over customs law. So it was perhaps an entanglement of law that made DRI withdraw its application without conclusively proving whether Adani Group is guilty of over-invoicing.
Yeah, it's not just Adani Group, as he pointed out. There are 40 other companies which were under investigation. So it's not clear why DRI withdrew its application in the first place. Two is whether it was because of lack of data or whether it was there was no merit to that investigation itself. So one cannot say what was in the mind of DRI when it withdrew its investigation itself. Two is obviously, I would think that Supreme Court should definitely consider this investigation also in its rulings now. I mean, if anything,
So,
the DRI investigation.
The SEBI report, which is expected to be presented in Supreme Court today, and it has been delayed multiple times over already, and we don't know just yet whether it is actually going to find its way into Supreme Court today or whether there's going to be another date assigned. But let's assume that it does go through today. Then would this new report have any bearing? Because I think the SEBI investigation is specifically in line with the Hindenburg research report, which suggested violation of minimum public shareholding and the case of short selling and Adani group of companies benefiting by short selling. So now we are talking about a very different sort of an angle to the story here, and we are talking about something which could be construed, as money laundering. So will today's Supreme Court hearing and any verdict that may come out of SEBI's filings and SEBI's investigation have any bearing, or will this report have any bearing on that, is question number one. And question number two, if this were to be seriously investigated now, then is SEBI the right regulator, the right body to investigate, or is it a CBI stroke enforcement directorate case
stroke
now?
DRAI.
Or DRI?
Yeah, see, SEBI's obviously ambit is the securities law, and violation of the minimum public shareholding is what is under its investigation. And SEBI, in its interim report, had already said that there were 24 items that they were investigating, and out of which they have closed out 22 items. And there are yet to receive data on 2 other items. This was last month when they put out that interim report, or rather when they submitted the interim report to Supreme Court. And so this is definitely out of the ambit of SEBI, and this could be FEMA violation. As you said, this could be a PMLA case from the perspective of money laundering. But so the ambit is definitely in the this one of DRI and ED to the extent if there is any merit to the case itself in the first place.
So how does it work from here, sir? Will there have to be an FIR filed by somebody? Will there?
Yeah,
what is the recourse now? And who files that FIR if required?
Yeah, even with the Hindenburg report at that time, see, Hindenburg had again had just collated everything, and then there was no specific complaint filed with SEBI or this one, and only then there were public interest litigations which were filed with the Supreme Court and some complaints to SEBI. Hindenburg by itself just made a big brouhaha, that's all, and a big report, and they had a specific position which is a short position. There is nothing wrong with having a short position. But here, definitely somebody has to file a FIR, or somebody will take off on the Financial Times report and then file a public interest litigation or something of that sort.
All right, Sriram, before we go to the stock impact of these allegations, I want to understand from you, if these allegations are to be proven to be true in case of an investigation, how serious are these allegations? Allegations of overpricing not just suppliers but also consumers at large, because most of this overpricing is then shared with consumers. The burden of energy is shared with consumers. We as consumers have to pay more for electricity. How serious are these allegations in your assessment?
Yeah, definitely, if proven true, they are quite serious, because as you said, it is the consumers at large who have borne the burden of this over-invoicing if it is true. And so to that extent, I'm not even sure how, if there is to be recovery made or anything, would there be take the form of a fine or some other implications, etc. So obviously, it's not going to be an overnight investigation. There will need to be, firstly, somebody who is filing a complaint, and then secondly, detailed investigations, which may take months together.
All right, Sriram Subramaniam calling for an investigation there as far as FT report on Adani is concerned. Sriram, thank you very much for taking time out. Thank you for joining us here on News9. Let's quickly also move into the stock impact of Adani on Adani group of companies. As far as those allegations is concerned, let's quickly pull up those stocks. Meanwhile, let me also, invite our guest Rohit Srivastava, founder, Strike Money Analytics and Indiacharts, joining us on the show. Rohit, we are discussing the ongoing, an investigation that was in fact carried out by Financial Times, released yesterday. And so far as this morning is concerned, we are looking at Adani Group of companies, all of them in the red. Do you think investors are reading closely to what is happening by the way of these allegations, or are there, very different sort of reasons for a downward movement in stock prices?
No, definitely there is a sentimental impact whenever there's news flow. This is, I think, a second one, because there was also a news item related to some allegations at the end of August on expiry day, and this is now a follow-up on that. But all this while, we are all waiting for the final note from SEBI in terms of what investigation it has already done. I think that that will be the final take. You're really not seeing the kind of panic we saw the first time these reports came out in January, when these stocks were falling 20-30% and eventually ended up losing significantly. Today's reactions will appear more like a knee-jerk one-day reaction, because already the last report sort of almost gave a clean chit. But the main area of investigation is not what happened, in the Indian operations, but what was happening through these companies that are outside our borders, and that investigation is the slightly more difficult one. So we'll have to really leave it for the authorities to do so. In the meantime, the reactions will be knee-jerk. They do definitely affect sentiment on the street for the day, but I think markets beyond that will have to start focusing back on what is the start of an earnings season, where expectations are, for a 20% earnings growth for this quarter. And I think that will play on the positive side of the other stocks that are in the index. I think the pull down really comes because of the Adani Group being in, so many NSE indices. If they were not there, it would have been easier in terms of sentiment for most investors. But I think that's the overhang really, that they are part of, too many indices right now.
Looking at data right now, good morning, Karthik here. Looking at data right now, in fact, Adani Enterprises is now down about 3% and is among the top losers on NSE this morning. So, I think, is it the start of another selling cycle, or do you think it is going to stabilize now at this down 3% odd levels? Because markets have been open for about almost an hour or so now.
So I think nothing has happened to say that it is going to become something bigger, because if I simply look at a chart of Adani Enterprises, it would not have broken the 10-day lows also. It's just fallen back after it's moved up a bit. So it's just giving back some of the gains it made earlier this month. So in that sense, it doesn't look so bad at this point of time.
Okay.
So it would have to probably fall a lot more for us to say that. And then today's market decline is also associated with Infi's earnings yesterday. So it's not only because of the drop in Adani stocks.
That's right. So while you're talking about Infosys, Rohit, what is your reading into the IT sector? We've seen TCS results, we've seen Infosys results, we've seen HCL Tech. What is your understanding, your reading so far on the print coming out of IT earnings? And now in the context of war, possible inflation impact in the US, discretionary spending likely to be cut, business in IT sector likely to reduce, fresh guidance issued by Infosys at a lower level. So overall, how are you reading the IT story?
So, you cannot get bad news at the top and good news at the bottom.
Okay.
So you have to really think about whether bad news is discounted. If you look at the behavior of the IT sector in the last quarter's earnings season, it was rather positive. In fact, after the results season kicked off, most IT stocks actually rallied after some initial reactions, because last year we've already priced in a lot of the slowdown that we are seeing this year. And I think that will continue to be the case. So you may see a knee-jerk reaction like today, but if you also look at the books of Infosys in terms of the orders gained, that there's a positive side to it as well. So I think the reactions will be more short-term, but having said that, growth is definitely slowing down, which means that the pace at which we've seen some of the large IT stocks go up in 2021 post-COVID, that pace may not continue, and that is what we are seeing. We are seeing a very slow advance in the sector, not the same speed as before, except in particular individual names in the mid-cap space, which are really high growth stocks. So we would really come down to stock specific analysis. The worst in the sector is priced in, but it may advance less slowly. So in that sense, would I really allocate significantly to the sector? Only maybe in individual stocks, but not in general. IT would not end up being a major allocation. I think as far as an Indian portfolio, there are a lot of other places which are growing at a much higher rate.
Okay, and this higher for longer commentary by US Fed, which means there is going to be higher pressure on US companies in their sort of orders coming into India. So overall contribution of IT, and then even the other report we saw the other day of 2025 being a washout year for IT. Is the world reading too much into the IT story? Like you mentioned, it's not going to be one of the heavyweights, heavy lifters of the economy. But is there too much focus on the IT sector? Are we reading too much into it?
See, one thing you have to accept that IT is you cannot really do without IT, whether it is in the form of services which are providing, back-end help, or whether it is in the form of products. Our world is running on IT, and now with the advent of AI, even more. So IT is not going anywhere, and then in that context, if you look at the US, is it growing or is it contracting? Yes, there's a lot of negative news flow, but if you look at S&P 500 earnings, for the last 3 quarters, it's been sort of 1%, 2%, 3%. Nothing great, but it's not negative. It's not like you're seeing earnings drop 20%. And so that simply means you have stability. You just don't have growth because of the tightness. And simultaneously, you're entering a quarter in which government spending is going to be picking up now that they have done away with the both the debt ceiling and the shutdown. A lot of spending is going to take place, which will eventually drive some level of consumption and growth in certain sectors. So you will see US equities in general start doing well again. That is my sense, at least over the next quarter. Okay. How much of that translates into Indian IT business growth is the tougher call, because if the US is growing very slowly, business growth does take a hit, and that we are already seeing, right? We are seeing it in terms of the slowdown in growth. So that's the broad picture. I don't think things are extremely bad as far as the US is concerned. They are in a tight spot, but you have government support in terms of spending, which is going to keep the growth momentum in certain areas, and that's the upside.
All right. And I want to talk about global markets, but before that, Indian markets opened in the red this morning, 0.5% down as of right now. Do you think the IT pack is pulling, the indices? The IT pack in itself was down about 1.3% last evening. Overall, what is the sentimental impact of IT companies reducing their guidance, pulling back as far as hiring more people is concerned? Despite mega deals that we have seen being announced over the course of last couple of weeks, there doesn't seem to be much of a traction on ground just as yet. I understand these are long-term future contracts, but when can we see an uptick?
So I would say I would not bother too much about IT. See, most asset managers have actually reduced their allocation towards tech. It's one of the sectors in the index, but there are many more. So if you look at earnings growth for the Nifty projected by most of the brokerage houses right now, trailing somewhere between 22 to 25% for this quarter. Last quarter, we delivered almost 30%. Now, with that kind of growth, you have to only answer one question. Where is that? If it's not in IT, it's somewhere else. It's in banking, it's in infra, it is in so many other areas. You'd end up allocating your money there in those different sectors apart from IT. So you go underweight IT, you go overweight something else, and things move along. That's, I think, the way we are going to really approach this whole thing. But definitely on a day when IT earnings have been announced and there's a 4% drop in Infosys stock in the morning, then it does have a sentimental impact on the day's opening. We've seen the index drop to 19,650 is, I think, the support level. We've stopped there, we've bounced back a bit, and I think as long as we hold these levels, things should stabilize and move ahead from here.
All right. And as my colleague pointed out, there were projections that IT is going to be a laggard. And as soon as the earnings season kick-started, we've seen markets reacting to that. Do you think the volatility in the upcoming weeks continue as more and more results are declared? What are you making of how markets are anticipating results from the IT sector? Because that's where it starts.
No, so it always starts with IT. But what I'm trying to highlight is that once other sector earnings start kicking in, then you start getting the upside downside balance, right? Like the weakness from IT versus the upside from other sectors balances out to a much more positive versus negative, because if overall average earnings are going to grow at 20, 22%, 25%, the upside is going to take over the downside.
So Rohit, is it fair to assume with all the data that we've seen, record car sales, record house sales, FMCG sales, the festive season consumption story, I think everything overall is adding up well when it comes to India's consumption, and the fact that Indians are saving lesser, investing more, as we've seen in the AMFI data on SIPs. So overall, do you think whatever we are seeing as a inflation impact on IT, the global inflation impact on IT, will be more than offset with results coming in the auto space, results coming in the FMCG space? Is it time to be not cautiously but really optimistic about the rest of the consumption story in India?
Absolutely, I think that's the nail you need to hit. That you have consumption, you have savings, you have investment. All of them are kicking in. We should not get bogged down by one particular sector's performance or one particular theme when there are so many things working in your favor. Focus on the areas that are really working and invest in that. We also call that momentum investing. Where is the trend? Where is the strength? So we look for strength and we bet on strength rather than bet on weakness.
Okay, and if I can ask you specifically about the auto pack, are we likely to see some impact of the EV mobility rush that we are onto right now, where companies that have EV vehicles will be better poised to grow going forward as compared to even companies like Maruti Suzuki that don't have an EV story just yet?
It's tricky because EV is a slow-moving, long-term trend. The adoption is definitely taking place, but by the time everybody starts buying EVs and you have charging stations and all that process, it's a long drawn haul. It's also that it's not going to replace the entire market, right? It's going to be a certain percentage only, and so we have to think of it that way. We can't really downgrade a particular stock because its exposure in EV is low at this point of time. It may be too early to say that. Because like I said, it's not like there's going to be a complete switch over to EV from classic vehicles.
Okay,
and another sector that we're tracking very closely is realty. Realty is also picking up momentum as we move into festive season. More people looking to buy not just affordable houses but also high-end luxury houses, and the stock impact is also clearly visible. What is your assessment of how realty pack will perhaps how will it perform going forward into the future?
It's making a very interesting comeback. So if we actually look at 2021, realty sector was really not doing so much as many of the other sectors, including IT, metals, etc., were doing far better than realty. But if we look at this particular year or the last quarter, we actually seen a pickup. In fact, just if we take the last 2 weeks also, in this bounce back of the market, the first sector showing strength was actually realty. So there's clearly an interest in the realty sector with the improvements that you're highlighting, and I would sense that it does well. It probably does pretty well now at this stage in the cycle where people are beginning to get back to buying homes from other spending patterns.
All right, and before we let you go, all global markets in fact ended in red. Hang Seng, Dow Jones, S&P 500, also on the back of the inflation data, the much awaited September US inflation data that came out last evening, Thursday morning for the US markets. What are you making of inflation? There wasn't a steady increase or decrease. It's a sense of status quo. Although US Feds were factoring in that the constant rate hike cycle will factor into US inflation, perhaps bring the numbers down. That hasn't really happened. What are you making of these numbers?
So, interest rates in the US do have a limit. You cannot raise them beyond a point given the size of the credit out there. So if they do keep going up, at some point the Fed steps in and starts buying those bonds, and then you get something which is known as yield curve control. Now, we're not there yet. They've not stepped in. They haven't done anything as of now. They're probably letting the market do its own job. But as far as inflation is concerned, it is a lagged data. If you actually look at certain prices, for example, I was just looking at wheat prices. They're down significantly from where they were, last year when the Russian crisis was at its peak. A big drop has happened in prices of wheat. We haven't seen coffee prices go back to the highs or soya bean prices go back to the highs. So a lot of commodity prices which are behind inflation are sort of stagnating. We've seen oil drop from 135 back to 70, and now it's back to 80, 90, right? So we're not at peak prices anywhere, but it takes time for inflation to really show that. What we're really looking for is that, does it really come back? And if not, then you'll probably slowly, steadily see inflation inch lower over a period of time. If it's slow, it's going to make policymakers hold on to those higher rates for longer, which is what is going on right now.
That's right.
But the real answer is going to come in whether you are going to slow down growth. Now, the catch here is what I mentioned right in the beginning. Governments are spending, which was not the case between 2010 and 2020.
That's
in
right.
the post-COVID world, government spending, not just in US but also in India, has picked up significantly and therefore become a great stabilizing factor when it comes to growth. And that is what will keep markets from getting impacted very significantly from the rate environment.
So if we were to talk about specifically, since we're talking inflation and we're talking about the government spending, is it fair to assume that for the foreseeable future, Rohit, the heavy lifting for growth, for India's GDP growth, will be done by government spending, infrastructure, capex spending? Or are we actually going to see perhaps post-election and once we are hopefully in a lower rate cycle, the corporate India capex also pick up? Because that has been elusive for as long as I can remember now. I think since COVID, the economy has really only been thriving on government doing the heavy lifting.
Yeah, so one of the forecasts that I have is for Indian rates to actually go down a lot, which will only happen once the global pressures ease a bit. Moment you see that easing in terms of the pressure on the US bond market, I think bond yields in India probably drop a lot more. And that will make corporates feel far more comfortable in terms of doing the investment and getting into the investment cycle. So once you start seeing credit growth, it's usually once it picks up and once the momentum, comes in, what we also call as, not green shoots, but I'll say, animal spirits, right? So once animal spirits really kick in, then that really continues as a pattern. Till that doesn't happen, governments are going to play an important role. Also remember, as we enter the election year, most governments are going to keep spending high, simply from the point of view of an election. And that also aids the underlying momentum as far as markets are concerned. So there's going to be that spending. But yes, once rates in India do start easing, you will see the corporate sector invest even more and the credit cycle pick up, which would then make things look much better than they do right now.
But Rohit, how insulated do you think India is going to be from what is happening in the rest of the world? Because we've seen, we had retail headline inflation coming on account of very high food inflation and vegetable inflation. That has eased off. So while numbers have come to 5% levels on headline inflation, we've also seen that core inflation, which strips off, energy and food prices, is not sticky anymore. So India specific, we've seen even core inflation now tapering down. So will we see a rate cut possibly as anticipated by RBI earlier than FY25, maybe in Q4 of FY24 itself?
And given that, the September inflation data has beat all estimates.
Absolutely.
At 5%, I think everybody that we've spoken to so far in the last 3 to 4 days suggested a 5.4 to 5.5% range. At 5%, I think it beat government estimates. If that remains, if that trajectory remains in the upcoming months, are we looking at a rate cut sooner than expected?
I would have liked to say yes. If you ask me, I would like.
We've been waiting for a yes. Nobody says a yes, Rohit.
Yeah, but I think they're trying to really weigh in what is happening around the world. I think that's why they're not doing it right now. Inflation in India has been at a much lower level than around the world if you just look at the differential. And that has caused interest rate differentials also to narrow down significantly. We've really not seen the difference between Indian and US interest rates at this lower level ever before.
Right.
And that is because we are in a better position. But can we really cut rates? Because the interest rate differential also plays a role on your currency. RBI doesn't admit it. They don't want to say that rates are being used to manage the currency, but it does play a role because if you allow the difference to remain low, your currency will remain under pressure, which then puts pressure on the RBI to keep selling dollars and keep the currency from running away. So that's probably a reason to let rates remain higher for a little longer as well till the global scenario eases. Moment that eases, I think we would be in a good spot to start cutting rates fast. But we are not there yet. So I think yes, it's going to be a waiting game for our own rates to roll over. The case exists, but the
Right.
timing is really the issue.
All right, Rohit, thank you very much for taking time out, sir. Thank you for joining us here on News 9. But staying on with higher for longer, if that's the rate hike cycle, and will it continue, will it not continue? To talk about that, Karan Mehrishi joining us on the broadcast. Karan, US inflation data, what does it suggest? So far we've seen the FOMC minutes, and there was a consensus that no rate cut, but a rate hike perhaps in the near term. Is that still the suggestion? There is a tepid sort of moderation in inflation data from the US, quite still not in line with the expectations.
Shweta, thanks for having me. So I think the headline number at 3.7% for September is extremely robust for the US economy. As I can sort of analyze what is happening in the US right now, and that is where we should be looking at, and not at what the RBI is doing as far as domestic economy is concerned, because everything is driven by the Fed at this point in time. Now, given the fact that core inflation in the US continues to be over 4%, and the continued job numbers that continue to be elevated, it is a sign that the US economy is growing despite an aggressive Fed. What this means is that the Fed may have to raise rates further, with the Fed rate probably breaching the 6% threshold, while at the same time contracting its balance sheet and sucking out liquidity from the system. So basically what the Fed is trying to do is that it is trying to pass a signal and stoke the market into believing that a higher for longer high interest rate scenario would remain. But if this happens, then the US 10-year government security yields will also breach the 5.5% threshold, as the earlier panelist was also suggesting that this actually is bad news for Indian capital markets, because the yield differentials, which is equivalent to Indian security, are already running at an all-time low and is hovering at around 2.61%. Now, last time, Shweta, we saw this scenario happening was in 2007, just before the ramifications of the global financial crisis took us out. Since the RBI is not in a position to raise rates at this point in time, given the fact that next year is election year, and we are seeing the core inflation story continuously on a downward spiral, we are actually staring at an abyss, and frankly, nobody knows what's in store for the global economy, and not just the Indian economy.
So what are the critical factors that you're evaluating right now? Karan, good morning to you. Karthik here. Are we just looking at crude being the one and only sole determinant of where inflation is going to go and how that is going to pan out? Or are we also looking at other trends like consumption in the US to pick up, which has also not happened on the back of high inflation? And China, of course, continues to deflate, and China is in the reverse low interest rate cycle. So apart from oil, are there any other red flags that you're really keeping your eyes on right now?
So I think, Karthik, we have to look at the evolving story in the Middle East involving Israel and Palestine.
That's right. So are we just looking at oil emerging from the Middle East being the single largest determinant of where inflation, where rates, and where global economies are headed?
So this is a black swan event, Karthik. I mean, this is something that we haven't really seen happening since World War II, I think. The Russia-Ukraine situation was already in the background. You also had the Taiwan situation with the aggressive China. Now you have the Middle East situation. So I think it will have ramifications on all commodities. And if you look at the headline number, I mean, both in the US and India, it's kind of moderating. But then headline number is a function of food and fuel. Now, if these commodities are sort of impacted by the situation that is now panning out across the world, almost in every region, then I think this number can just sort of move up and surprise the market significantly. We're already seeing yields tightening And that is a sign that the market is actually unsure of what is happening and what will happen.
But Karan, even core inflation at over 4% minus the food and fuel is relatively higher for the US. So it doesn't look like crude is going to be a major bummer as far as inflation is concerned.
So Shweta, what is happening in the US is a different story altogether as far if you compare it with what is happening in India and other emerging markets. A lot of captive saving is at play in the US. So what happened was that during the COVID crisis, the federal government provided a lot of freebies and cash checks to households. So they're actually sitting on a lot of cash. And savings. So that is sort of driving consumption in the US. And again, the US economy is also very strong because obviously corporate profitability was very high and they were sitting on a lot of cash. So they are not sort of passing on the commodity price escalation to the household. So the situation is sort of benign as far as consumption story is concerned. And that's why we are seeing very robust job numbers as well as the core inflation continuing to be around 4%. Right. But as far as the India market is concerned, Shweta, I mean, my biggest concern right now is, and I actually have a question or two for all those market commentators who have been gung-ho about the robustness of the Indian consumption story, that the core inflation number is actually falling since January 2023. I mean, that is this calendar year.
Okay.
In January, the core inflation number was around 6.05%. And yesterday, the number came in at around 4.53%. Now, that's a massive fall of nearly 150 bips. So core inflation is actually falling every month in India. And that is not a sign, not a good sign actually for the macroeconomy and all the entire story that was revolving around the robustness of consumption and how household sentiment is so strong is actually falling on its back completely.
Okay, fair enough, fair point. We will of course keep tracking those numbers, but Karan, we've run out of time on this bulletin. Yeah. Thank you very much for joining us here on Newsline.
Thank you.
And with that, it's a wrap on this bulletin. Thank you for watching.
Literally every major power